Welcome to the 40 Finance channel. Today I'm going to do a quick update on the TQQQ as of April 2025. This is the 3x leveraged ETF that mimics 3 times the daily performance of the QQQ, whether that's up or down. If the QQQ goes up 1%, the TQQQ in that same day will go up approximately 3%. And obviously vice versa. So that's how it works. I've done a million videos on it. If you want to learn more, you can check those out in the comments. But the reason I wanted to check in quickly today is obviously we've had what most TQQQ aficionados would call the perfect storm to buy this one. This is the one that you want to get at its low, just like any other stock. And like all great buying times for the TQQQ, it rarely makes sense when you're in the middle of it. So if you bought 1 share of this on the first trading day of the year, you are down approximately, what's that say, 45, 46%. Now, I would say that most of the year, heading to about Valentine's Day or so, there was not too many opportunities to pick up on this one if you were looking for dips. However, after Valentine's Day, there's been several benchmark events, depending on how you look at things. And the big reason you start to see a lot of interest in things like the TQQQ in periods like this is because it's all a game of buying low and waiting for the rebound. And in this case, I'm going to switch over to the QQQ because when I look at the indicators, I typically switch to the QQQ. And if I scroll down here on Seeking Alpha and we try to see, there's the moving averages. Okay, so last 10 days. Today is April 3rd. Today is April 4th. Last 10 days, you're down 5%. But the bigger ones are the longer ones, right? So the 50-day, minus 10%. 100-day, minus double digits. 200-day is almost down double digits. So you're just kind of, if you're looking for an eyeball on just moving averages, you kind of want to get to this death cross, so to speak here, which is this purple line, and you want it to go under the red line. Then the other thing that I'm always looking for is the RSI. We want to see, this is a 14-day RSI. Some people use 10, some people use 5, whatever it is. You just want to have some sort of benchmark. I don't think, in this particular case, I don't think the granular scale does much for you because you only have to go to any stock market website and realize that we are definitely in some sort of correction here. But for the sake of illustration, you know, you're trying in a perfect world, this is where the RSI is going to show up here. You're trying to get under 30 is a great place to be. So when you look through this after Valentine's Day alone, and I'm not going to count them off, but you've had several low 30s. You've maybe had 4 or 5 in the 20s, which is, you know, basically the dream scenario if you're looking only at RSI. But here's the catch, and here's the pain point that you see a lot of people fall out of the TQQ strategy, and that is the fact if they first started buying, let's just say it was February 21st, because the stock market took a little dip down. In and around that time, you had a price of about $80. And if that's the first time you ever bought the TQs, you have lost roughly half of your original investment, which is why you can never go all in on this one. You could make the argument for the COVID back in the day. That obviously would have panned out well. But for the most part, you have to be able to survive this going lower, even lower than today. So if we look at this from a 1-month view, you have to be able to average down, particularly on those very, very low RSI days. So if we said there was 4 or 5 of them in the 20s, you have to be able to come back in and get your cost basis down. So even if you bought today for the very first time at $42 and essentially said to yourself, I'm calling bottom today, I'm going all in at $42, I think you're making a pretty big mistake, particularly since we don't know which way all this tariff stuff's going to go. Now, personally, for me, I think the tariffs are going to be clawed back over time. Just did a video on that. 60, 90, 120 days. I personally think, and it's just an opinion, I have no facts on this. My opinion is that we went all the way over to one side with it, and we'll claw some back. And if interest rates, which have already shown that they drop in this scenario, they're already leaking out a little bit. If the interest rates for America start to come down, then you're actually in a position to see a nice little bump in the stock market. And it doesn't even have to go back to all-time highs. You don't have to worry about TQQQ going to $80, right? You just have to make sure that you've averaged down all the way to wherever that bottom is. And that could take longer than you expect. In fact, you should assume it will take longer than you expect. So what do you have to do if you want to experiment with this strategy, if you want to, basically have some fun and have an opportunity to take advantage of a 3x ETF like this? You have to have the capital to ride it all the way down. I did this particular thing, and you can go back and watch the videos, whatever it was, 2022, maybe as soon, almost the week after they announced the first interest rate increase, I came in and started buying the TQQQ because I wanted to do an experiment. How stupid, basically, how far to the top can you buy, average down, and make money off of this thing? And it took, I want to say it took a year and a half or so for me to get back into the positives. And then I ultimately exited with, like plus 20%, something like that. And I could have had a lot more if I would have let it ride all the way into, let's just say, December of this year. But since I had put so much time, I'd lost so much time investing with it, I just took my plus 20%. To me, it was kind of like point proven that you can get in at the start of the downturn. And as long as you've saved up enough money to continue to average down, you will eventually win this game, but you have to be prepared. Okay, and then one last thought here today as the QQQ inches over 5% down in just today. And what you see on this one-year chart, you now have the Qs almost by coincidence of where this calendar date starts, but the Qs are down minus 3% over the past 12 months. But it's hard to look at this particular opportunity that we have right now and not get excited, at least somewhat, about the investing opportunity for the long term. And I'll say it one more time, you're talking about if you bought a share of the Qs or a share of the TQs in some examples, but particularly the regular Qs, you're talking about buying at 427 today, and you don't even need it to go back to all-time highs. If the all-time high was 510, something like that. Oh, geez, it was 539. I was way off. So you don't even need it to go back to all-time highs in the short term to make a good amount of money, but you do have to have enough money to keep lowering your cost basis if this tariff crisis continues to go on for an extended amount of time. All right, guys, that's my take on TQQQ here in April of 2025. Saw some screenshots of Seeking Alpha on today's video. If you're interested in learning more about my favorite stock research platform, check out the link below. You get a 7-day free trial as well as $30 off your first full year. I hope everybody's doing well. We'll see you on the next video.